Okay, ladies and gentlemen, boys and girls, welcome back. I was in two minds as to whether I was going to put out a forecasting video for this week, as I don't think I'm going to be actively trading until at least next week, if not, then possibly even the beginning of February. However, I thought just to keep in trend with what we've been doing, we've been putting out forecast videos for every trading week. So I thought I'd quickly do a literal top-down analysis again. I haven't looked at the charts actively for the past 3 weeks since the 10th of December. And although I've been monitoring what's been happening on and off, I haven't spent any active time on the charts, trading, or anything of that sort before Christmas. So I hope you guys had a good break and obviously roll on into 2022. New year, new beginnings, new start, and hopefully a change of our trading successes for the year ahead. I'll jump straight into it. As per standard prerequisite protocol, we look at top-down analysis. We go to the month, which we haven't done for a little while. We can see that the market obviously has trended down, bearish. We had our COVID spike 2020 March. These areas of liquidity and interest that we had marked up previously in October of 2021 are still active and relevant. They have not been mitigated as yet. The market currently still looks like it's in a bearish reversal of sorts, although it has been testing the supplies and resistance on the way down. It does look like it is on a reversal trend at the moment. So it seems like it's basically going bearish at the moment. I am still currently long-term, i.e. on the monthly pro-10 bearish, but we will see how that kind of plays out in the next few weeks, because the UK government has had a very different stance to the rest of Europe in terms of the Omicron variant. And it has shown positive signs in terms of how trade, commerce, and public activities have been allowed to continue throughout the Christmas and the New Year. We'll see how that kind of filters out into the coming week and weeks ahead in January as well, and how that kind of impacts on our assessment on the charts and where that takes us for the quarter ahead. Okay, so monthly stays exactly as it is. We jump down into 2 week and see we've got a very good push tail end of December over the Christmas period, coming back up, possibly trying to touch supply up here. So this is an area of interest for us at the moment. We're looking to see whether the market comes up into this area and then respects that supply to then continue down. We have got, I think, a shorter time frame equal high area above there. So there is a bit of liquidity lying above this zone, which could be a little bit hesitant for us to try and tap into. There's a lot of wicks up here showing rejection previously, which are respected. So this zone is quite critical to me at the moment. We want to see how the market comes and reacts off this. I'm going to see if I actually have a template saved for this. I don't. Okay, so what we will do, this is our weekly supply. This is our weekly supply. We're looking to see how the market reacts out of this area. When we jump down onto, another point from here as well. The market has actually reacted off this weekly demand. It's kind of tapped into it, rejected from it, but there is a lower demand, I believe, on the 1 week down below, which I marked up previously. So it hasn't reached that as yet. It's kind of come off this big demand candle, respected the wick to the downside, reversing off that, possibly coming in to take an imbalance and liquidity from here. So there are a couple of key zones that we want to try and watch. We've got an area of imbalance in here as well that may need to be filled. The wick that it's currently testing as well is also an area of interest, because obviously that holds within it also inefficient price action. We're kind of tapping up into that now, it seems. We'll see how the market opens and respects these three key areas above us at the moment. So what we want to do is watch how the market comes into these zones, how it reacts off them, and whether it's showing us a bias to continue on the bullish push to get into the weekly supply up here. This is obviously the 2 week supply that I marked up. The weekly supply above that is actually the candle that we see right up top here. So there's a lot going on here at the moment. We want to see how the market comes into each of these areas and see how it reacts off. As I said, we have got stop losses sitting up here, equal highs, and a lot of short sellers possibly sitting above this area. So in essence, an area of liquidity grab above here as well, which we want to be wary of. Bullish, I think, short term for now, depending upon how we react off the inefficient wick here and the imbalance zone above. We're probably going to look for some form of short-term bullish bars possibly into these areas and then a reversal off them. As I said before, GBP is showing signs of strength because we haven't locked down, we haven't gone down into the same type of precautionary measures that the rest of Europe has, and this shows us within December how the market rallied and finished off the year with a couple of bullish candles here on the bi-weekly. 2 day, let's knock down onto this and see where we are. So we're currently in an area of supply that did cause a break of structure to the downside. This area is kind of being tested at the moment. We want to see how the wick of this candle also specifically gets tested. At the moment on that weekly wick, we're looking at 50% being mitigated. On the 2 day, we can see how it's kind of fallen into the area. It's starting to reject from the 50% area. We want to see how it kind of opens up in that area and what it does as market opens. There are a few new news releases coming up as well, I think, in the week. So we want to be, I think we've got NFP this week as well. Yeah, okay. So daily, yep, beautiful. So we're basically tapping up into supply. We can see how the price action on the lower time frame, which shows inefficient price action, actually has been filled on the lower time frame. So the daily actually shows us price covering itself. This area would actually then not be an imbalance. It's actually an area of supply, which caused breaker structure to the downside. So there's obviously a large volume candle here. Supplies formed here, pushed down to the downside, interim structure broken, reinvigoration with an interim push again down, and then continuing to the downside. So there obviously is a considerable amount of volume here, which kind of broke structure to the downside and continued that move down. So that's an area we want to watch as well. Obviously, this entire area on the higher time frame, which you marked as supply, is a consolidating area. It seems like it was an area of distribution where we have liquidity being formed above, and the market moved off from this zone. So again, an institutional move seems to have taken place here to move the market to the downside, left behind sells above, and we're looking to possibly come up and tap into some of these zones. We'll see how far up we get into there. So on the 8 hour, if we go down again further, just to basically re-analyze things, we can see the institutional move here, bullish, 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 and then it gets stopped with an imbalance here now on the lower time frame, which sits within that supply zone. So we can see that there's a lot of accumulation of liquidity and orders that need to be filled above us still yet. The wick above here has not been made efficient. That's an area that could be targeted. It sits within the inefficient wick of the weekly candle that we marked up previously, but there is also imbalance above that as well. So we may well be looking to tap up into a supply within this zone. So our short-term bias, I think we've got enough information thus far. We want to see how the market opens. It could do anything as market opens. Effectively, we could basically end up coming down into inefficient price levels here, take out liquidity down here, and then return up. But our bias at the moment is we want to see the market come up into these areas, test around this zone, and then we want to see it kind of respect and retrace bearish for the time being. If it continues higher, all good and well. We'll basically get in on the move as it gets created. So effectively, scenario 1 is this. Scenario 2, we may well be looking at a breakthrough supply test, and then further up for liquidity above us. So we'll mark that as well. Give you a color you can see. Okay. So scenario 1, scenario 2. So these have been mapped out. This is what we're kind of looking at. We may well be going for liquidity higher up because obviously the EU, the GBP is performing well at the moment. It may well be a case that we kind of go higher up before we kind of drop down. Again, as I said before, there are much more levels below us that still need to be tested. We have come out of a demand candle that broke structure to the upside interim, but it also has respected overall structure previously. So there are obviously equal highs up here as well, which could possibly also be targeted. So we, have a lot of liquidity above us at the moment that the market could go for, and then target to come down for again. This entire wick is inefficient up here as well. So there's telltale signs on both sides. We could be looking for a bullish momentum short term. We could be looking for a reversal. Again, we're going to wait to see what the market shows us as it opens, as this week develops. Monday is usually always a finding your feet place kind of day. And then the rest of the week will actually go pro trend. For that week, Friday will be a wrap up or a reversal on the move that the market creates for the week. So I hope that gives you enough information. It's not very clear, as I said. New Year will always be a bit sketchy. You'll have to wait to see what the market does and dictates before you take trades. Don't just jump into things. Let the market find its place and then take the trades once the confirmations play out on the lower time frames. And when I say lower time frames, I'm meaning on the daily, on the 4 hour. You'll want to see some confirmation taking place. This is a compression move happening right now. So we can see the market is slowly working its way up in a zigzag fashion into an area of interest where it will then target and then decide which way it wants to go. And when it does that, we'll wait for the confirmations to take our trades following what the market shows us it wants to do. The weekly wick and candles don't really show us much. A very large impulsive move continued with a good volume thereafter. So an engulfing candle effectively, and it continued on, no wick to the downside. So there's no real mitigation of orders here for the market to come back to at the moment. It's a firm push up. We want to see if this continues up or it comes back to mitigate any positions that were left behind in this high volume move throughout the week. On the daily as well, it doesn't look so great. There wasn't a great amount of move, but there are imbalances and inefficiencies that lie here in terms of price. We can see how demand continually gets induced to push the market up higher and higher and higher again. It is running out of steam at the moment now. The candles are smaller. There's not that much movement. And obviously end of the year, volume died out. Even though the market was moving bullish, it's not a great move. I mean, if you compare this candle on one day in November to this entire move throughout December, it's done that in a day, and it took a whole week for it to do it here. So let's see how the market opens. Any questions, comments, drop a like, comment, subscribe to the YouTube channel. I will try and post this onto my Instagram. I'm actually doing without a phone for the past 10 days. Self-inflicted detox from technology. But I thought I'd do you a service and actually post this onto YouTube. Hope it's been efficient and helpful. Drop your comments into the video. If you can't get a hold of me on Instagram, I probably will have my phone on from tomorrow. But I won't be engaging, as I said, on the charts, I don't think, for another week. Okay, guys, trade safe. See you soon.